Good morning.
Good morning. Good morning, sir.
Yeah, good morning.
Yeah, good
Yeah.
morning. Yeah.
Okay. So my name is Wasil. I'm one of the lecturer who is going to take us on taxation at this level, at the skill level. So you are all welcome to Equity Professionals. So then I believe my other colleague has started with us last week for the introduction aspect. So I need to confirm that from someone. Did he start with us last week? Mr. Idris, do you have any class relating to taxation last week?
Yes, there was a class last week, but I don't think it's Mr. Idris that took it. The one I
Okay,
joined on Saturday morning, it was, I think, Mr. Chris.
Mr. Chris. Okay, it was Chris. Okay, Mr. Chris that took the class. Okay, okay. Then he will have given us the introduction aspect, all what we are expected to know about the syllabus. So I believe we will have. So Abby, so what the syllabus entails. So I'm very sure we will have given us information relating to that. Can somebody respond to that? Am I right? The requirement of the syllabus. Hello. I need somebody to respond to that.
I can't really remember if he checked the syllabus, what he majorly did, because we didn't really, I don't think we spent much time that last week. He said he was trying to cover up because I think you were supposed to take the class, but maybe because you were busy with something, so that it will not be that nobody appears. So he just
Okay,
came. But I can't really remember if he talked about the syllabus. But he
okay,
did like introduction to taxation. Like he
okay,
just talked about it.
okay. So I just want to know where, what he discussed with us so that we'll be able to then. That was the only time we did it task last week, Abby, on Saturday. Okay, so no problem. Basically, our syllabus for taxation, okay, I'm coming. Give me some minutes. I want to 1869. So basically, our syllabus on taxation expect us to know one or two items which are important and necessary as far as the syllabus is concerned. So for the syllabus under taxation, so the syllabus basically is divided into four major into five, sorry, it's divided into five major parts. So the first one being the introduction, tax administration, and ethics. So that is having a weight of 20%. Then we have what? Transactional taxes. So we have the transactional taxes, which is also carrying certain weight, which is 20%. So under the transactional taxes, we have what? You are expected to know about withholding tax. You are expected to also know about value-added tax, to also know about some other taxes that relate to consumption of goods and services, like other custom and excise duty. Also, another basic component of the syllabus is what? Personal income tax, which is what? Taxation of individual. You and I that are individual, either we are under paid employment or you are what? A self-employed. You are the owner of your business. So tax payable by individual is regarded as what? Personal income tax. So how do we calculate that? It's also what you also expect. Then you also expect to know what information related to our company income tax. Company income tax for company. So apart from individual, because basically we have two categories of taxpayer, which can either be either individual or company. So for company, how are they expected to pay what tax? How is their profit being subjected to tax? So which is what for the so the last one is what information technology, which is having what 5%. So which is what basically the requirement of the syllabus. So each of these requirements in the syllabus as is what is subdivision. Each requirement acts is subdivision. That means what under the personal income tax, you have other topics that you are going to talk about there. Under the transactional tax, you have some topics that will be talked about. Then under the what? The introduction, it's not only about talking about the introduction to tax, you also have some other topic that will be that will be discussed under under the introduction, as well as under the company income tax. Because for company, we have various category of company. You have those companies that are that are so we have those companies that are that are the normal company and those that are regarded as specialized business. All those you are expected to know as far as the syllabus is concerned. So today, being the first day we are looking at so we'll be starting with basis of assessment, which is the basis of of taxation. This basis of assessment can be incorporated in any of the other topic. So for this particular subject, a good understanding and knowledge of basis of assessment is very important for all students. So basically, everyone is expected to have a good knowledge and understanding of basis of assessment, because this basis of assessment is what you are going to need for for basically all other topics under under all other topics, because it can be incorporated and implemented in any of the other topics. So basically, I believe we can see my screen. Can we see my screen?
Yes, sir.
Yeah, okay, yes. So thank you. So basically, so what do we mean by this basis of assessment? So basis of assessment. So this basis of assessment basically means how is a taxpayer, how is taxpayer financial transaction or event? How are the taxpayer financial transaction or event in a particular year is going to be subjected to tax using appropriate tax law or act. That is, what is the process? What is the procedure? What is the scenario that we are going to use to subject a taxpayer? Don't forget, I made mention earlier that a taxpayer can either be an individual or a company. So under this basis of assessment, we want to look at how are you going to subject an individual or a company transaction. What kind of transaction? Their financial record. How are we going to subject their financial transaction in a particular year? That is, what will be the basis of what? Of calculating their tax. Following what? The appropriate tax law. Or it is simply what? How do we assess what? A business or an individual what? To tax. Using what? Using appropriate tax laws. That is the basis we are going to use to know that, okay, this is how much tax this person is going to pay in a particular year. This is what this person is going to pay. So what is the procedure developed by the what? By the law to what? To charge what? Taxpayer to tax. So that is what basis of assessment is all about. So under this basis of assessment, we are going to talk about various terms which are very important and necessary to our knowledge. So we are going to talk about some terms that are important to our understanding. So the first terms we are going to talk about is what? Government tax year or fiscal year. Government tax year or fiscal year. Government tax year or fiscal year. As we all know, tax is a compulsory levy that is collected by the government. From where? From either individual or company, from anybody, from any citizen or corporate body that are within what? The territorial integrity of that particular region or that earn income from that region. So because this tax is compulsory, so that means it is possible that what? And the person who want to collect that tax is what? Government. It is possible that government is going to develop a particular framework or a particular year that they want you to what? To pay tax on. So that particular year that is developed by the government is what is called what? Government tax year or fiscal year. You can also call it what? National fiscal year. So this government tax year, before 1981, government tax year basically is usually a period of 12 months. When they say year, please, anytime you hear anything, they tell you year. What year means is that what? That period, the number of months in that period is going to be what? 12 months, which is going to be a year. So anything, whenever you see year, it is what? A period of 12 months. So government tax year is a period of 12 months, which is what? Developed by the government. Before 1981, government tax year usually ranges from 1st of April to 31st of March. From that means what? It's going to extend from one year to another year. But from 1981, government has now made their tax year to be from where? From 1st of January to 31st December. So basically, now, the government tax year is now what? A period of 12 months from 1st of January to 31st December annually. So when they say government tax year, fiscal year, is a period of 12 months from the beginning of the year, which is from 1st of January to 31st December of that year. That is what government tax year. So the fact that a government is having a tax year Another terms we are going to talk about is what? Accounting year. Accounting. When they mention accounting, who is going to prepare an account? That is the taxpayer. Either the individual taxpayer or the corporate taxpayer. They are the one that are going to prepare account of their record. They are the one that will show record of their transaction. So accounting year, this is the year in which any taxpayer who carry on trade or business. The reason why we need to prepare, why a taxpayer we need to prepare account is because of you are engaged in what? Trading activity, or you are engaged in what? In business. You and I, if I'm not doing any business, if I'm not doing anything, I don't need to prepare any account. Because the only thing I know is that I will just have what? Record of my what? Of my transaction. I know how much is my salary. Then what I need to know is what? That salary I receive, how much am I going to spend it? There's no need for me to say I want to prepare any financial record because I'm not engaged in what? Business. But for a taxpayer that is engaged in what? Business, or is doing what? Trade, or is carrying out a profession or vocation, it's also expected to what? To do what is called what? To keep what? To have what? An accounting year. Accounting year is a period of 12, it's also a period of 12 months where a taxpayer prepare what? Prepare his transaction by matching what? His income generated for the period with what? With the expenses. So accounting year is that what? Is that period that a taxpayer, whether an individual or a company, usually a period of 12 months, that period of 12 months that a taxpayer want to what? Want to prepare account to know whether he's making a profit or is making a loss. So that is what? Accounting year. And by law, this accounting year does not need to what? To be the same thing with what? With the government tax year. Let us note that what? This accounting year is not necessarily have to be the same period with the government tax year. You as a taxpayer, you can decide that what? The accounting year you want to adopt is what? April to March. There is no law that says you must adopt what? The government fiscal year, which is from 1st of January to what? To 31st December annually. So basically, accounting year is what? Is that period of 12 months that is what? Specified, that is developed by what? By the taxpayer to keep record of their transaction, which will show what? Whether a profit or loss is being made for that one, for that particular year. That is what accounting year. Then after accounting year, we also have what is called accounting date. We may mention under accounting year that what? A period of 12 months. So that means if I want to keep my record for a period of 12 months, there must be a date that what? That I'm going to specify that, okay, this is the date I'm going to end my accounting year or period. That date that I want to be preparing my book of accounts is what is called accounting date. That is the date the financial statement or book of a taxpayer is prepared based on what? Accounting principle. So I want to prepare my record for 12 months. But if I want to choose a 12 month, the law have stated that it is not compulsory that I choose the government one, which is from January to December. So if I decide to choose end of February, that end of February is what? Is going to be my what? Accounting date. That end of February, which I choose that one, that is when I want to be preparing my account annually. That date is what is called what? Accounting date. Why the period? For the period of 12 months is what is called what? Accounting year. Then after that, the next time we have is what? Accessible profit or income. So accessible profit, it can either be accessible profit or it can be accessible income. So when we say accessible profit or income, the fact that you are into a business, if you are rich or you have what? Excess funds, No law stop you from what? From having a business entity and also investing in what? In another business, or investing in what? In another property, or having what? Having what? Building or other property that will also what? That will also generate income to you as a taxpayer. So as a taxpayer, the totality of all your income from all sources, when you add up the totality of all the income that you generate from all sources, when you total all of them together, the totality of all the income is what is called what? Accessible profit or income. There is going to be accessible profit where the taxpayer is what? Is a company. Because company is either they make a profit or loss. Then we'll talk about accessible income where the taxpayer is an individual. Because as an individual, what you receive is what? Is income. So you and I, when we add up all our income together, whether you are doing a business or you are under a paid employment, the totality of all your income from all sources is what is called what? Accessible profit or income. For individual, it will be income, while for company, it will be what? Accessible profit. So any question? Any question so far? Any question so far? Any question? Any question so far? Hello? Can I get response from us?
Yes, no question, sir.
Okay, thank you. Thank you for that response. So let us continue. Then after that, so the next thing we have is basis of taxation. Basis of taxation. How, so we said, well, basis of assessment. How are you going to charge the taxpayer to tax? So basis of taxation. Under what basis am I going to use? So under the basis of taxation, we have two major bases. We have what is called what, the actual year basis and the preceding year basis. In some question, instead of writing it actual year basis, you may see they will put AYB. AYB is what? Actual year basis. And you may also see they will put what? PYB. That is what? Preceding year basis. So if I want to charge a taxpayer to tax, what would it be? What would be the basis that I'm going to use? Am I going to use actual year basis or preceding year basis? So what does actual year basis entail? So when they say actual year basis, as the name implies, actual, which is what, when they say something is actual, the same. So actual year basis, that is the basis period that starts in the same year and also end in the same year. It's going to start in the same government tax year and also end in the same government tax year. That makes it to be what? Actual year basis. It's going to start in that year and it's also going to end in that year. So what that means is that the basis period must start in the same year and also end in the same year. So what do we mean by that? A good example, if you look at that material, so you have 2022. If you look at 2022, this information I asterisk now 2022 under this actual year basis. So for 2022, if you are talking of actual year basis, so for a taxpayer that is adopting the government tax year, that means actual year basis will be from 1st of January to 31st December of that year. So actual year for 2022 will be 1/1/2022 to 31st 12/2022, which is what? Actual year basis. So the basis period must start in that same year and it will also end in that same year. So that makes it to be what? Actual year basis. That is why it is called what? Actual year basis. Also, if the year is 2023 The basis period will start in that year and also end in that year, which is on 1/1/2023 to 31/12/2023. That is also what actual year basis. Apart from actual year basis, we also have what is called what? Preceding year basis, which is what PYB. So what that means that the basis period, the period we are going to examine in question, must end before the tax year. Preceding year basis means that that basis period, the period you want to charge that person to tax, is a period that is going to end before the government, before the tax year. The period is going to end before the tax year. That means it's to be what? Preceding year basis. It's going to end before the tax year. That means it's to be what? Preceding year basis. A period that is going to end before the tax year. So when they now say preceding year, please don't forget, I told you anytime you see year, that is what? A period of 12 months. So preceding year basis. So the period you are going to consider will be what? It's going to end before the tax year. So if you are looking at 2020 now, so if your tax year is 2020, if you are now talking of preceding year basis, that means the period we are going to consider must be a period that will end before this year 2020. And if any period is going to end before year 2020, that will be what? 31st December 2019, which is what? So that means the basis period will be 1/1/2019 to 31/12/2019. Also, if the tax year is going to be 2021, that means the period you are going to consider will be what? Must end in what? Year before 2021. Year before 2021 will be what? Year 2020. So the basic period will be 1/1/2020 to 31/12/2020. If, for instance, if the company, the taxpayer does not adopt the government fiscal year, that means the taxpayer does not adopt January to December, where the taxpayer is adopting their own accounting date to be 31st March. So if their accounting date is 31st March, that means the preceding year of 2021 will be what? A 12-month period that must end in a year before this 2021. And if they are adopting 31st March, that it will go to end by 31 March 2020. A year before 2021, 31 March 2020, which is going to start in the next 12 months. So 12 months, if you are ending 31st March 2020, counting back, 12 months will be what? 1st of April 2019. So that is what they mean by what? Actual year and preceding year basis. So actual year is what? The same year, while preceding year is what? Year before what? Before the tax year. Then after that, we have what? Another term we are going is what? Basis period. So basis period. Basis period. So the basis period is the period for determining assessment and tax liability of a taxpayer. That is, how many period am I going to say this person is going to pay tax for 10 months? Is he going to pay tax for 3 months? Is he going to pay tax for 2 months? Is he going to pay tax for 1 month? Or so what is the base? So that period you are going to use is what is called what? Basis period. So basically, there are 2 types of basis period. 2 types of basis. We have what? The normal basis period and the abnormal basis period. We have 2 types of basis or classes of basis period. We have the normal basis period and the abnormal basis period. When they say when they say something is normal, so what that means is follow the normal procedure. It has no issue. So a normal basis period is a period that has the following features. Number 1 is that it must not be more than or less than 12 months. We made mention earlier that a government tax year or fiscal year is a period of 12 months. So a normal basis period must be a period of 12 months. It must not be more than, and it must not be what? Less than 12 months. So that makes it to be what? normal. It must be the same. Then a normal basis period must have started immediately the previous one end. There must not be what? A gap or overlapping in between the basis period. That means when one is ending 31/12/2020, the next one must start by what? By 1st of January 2021. That makes it to be what? A normal basis period. That must not be what? Anything like gap. What do we mean by this gap? That is, if one is ending by 31st December, the next one must start in what? In January of the... It must start in the next day. There must not be anything like gap. So where you don't have that, that means what? That is what? A normal basis period. The normal basis period, it must be the only basis period of the tax year that anyone in the year before what? The tax year. That means that basis period must be what? The only basis period. That year must be the only year that is having that one, that basis period. That means it to be one, a normal basis period. So a normal basis period is a basis period that is what? Following what? A normal, a right way. No issue, no problem. While in the case of what? The second, which is what? Abnormal basis period. An abnormal basis period, this is the basis period that does not follow the features or characteristics of a normal basis period. Those basis period and basis period that's what? That is either what? Less than or more than 12 months. So when you have a basis period, you are given a period that is either more than or less than 12 months. That is what? An abnormal basis period. Then a basis period that is going to have a gap. One end in what? In December. Instead of the next one to start by January, the next one is starting by April. That makes it to be what? An abnormal basis period. Then another characteristic of an abnormal basis period is that what? That basis period is going to be common to what? To more than 1 year of assessment. You may have it, that same basis period in 2020, that same period, you also have it in 2021, and so on and so forth. That makes it to be what? Abnormal basis period. It is under this abnormal basis period that issue usually arises, because what? It is usually an abnormal basis period. So under this abnormal basis period usually occur under 3 scenarios. So abnormal basis period will occur when there is a commencement of trade or business. When a company is commencing their trade or business, they are going to encounter what is called abnormal basis period. Abnormal basis period will also occur when we have a cessation of trade or business. When a business, instead of being in going concern, when they want to stop their business, cease operation, such situation, you also have an abnormal basis period. Abnormal basis period will also occur when we have a change of accounting date. So it's also a period. So where you have one. So this 3 scenario is when we have what? Abnormal basis period. So which are the scenarios that are what? Important and relevant under this what? This our what? Under the basis of assessment and under this one, abnormal basis period. Then another times you need to talk about is when you may be given a question. Instead of when they give you question, they will not tell you period to. Please, when you see period to certain dates, what that means is that that basis period, the number of months in that basis period, it is either it is less than 12 months or it is more than 12 months. So when you see period 2, what that means is that the number of months in that basis period is either less than 12 months or more than 12 months. So that is the implication of what? Of that when they say a period is what? When they say a period is what? Is when you say period 2, they may say period to 31/12/20. So by the time you count the number of months, it's either going to be less than 12 months or more than 12 months. So that is what period to entails. Then when you see year end, please, whenever you see year end, all that means that the number of months in that period is what? 12 months. Anytime you see year end. It's a period of what? It's a period of 12 months. A year end is a period of 12 months. Please let us take note of that. So which is what? A period of 12 months. So that is what? Year end. So after knowing all these terms, so we need to consider each of these scenario of abnormal basis period one after the other by looking at what each of them. So under the abnormal basis period, as I said earlier, we have a 3 scenario. We have commencement of trade or business. We have a cessation of trade or business. We have a change of accounting date. So each of these scenario, we need to look at them one by each, one after the other. So the first one we are looking at is what? Under the commencement of trade or business. Under the commencement of trade or business. As a taxpayer, if you want to do business, the first thing you do is what? You visit what? You apply to what? CAC, Corporate Affairs Commission, to register your business. When you register your business as either a company or as a business name, as an enterprise or as an individual company. So that is the first thing you do. So when you register that company with Corporate Affairs Commission, it is expected that after registration, you are expected to what? To start what? To start operation. So which is what? You are expected to commence business. So when you now commence business, it is also expected that what? When you commence business, you have what? Obligation to fulfill to the government. So, and how do you fulfill this obligation to the government? By paying what? Tax and what? Filing your return to the appropriate tax authority. Before now, under the tax law, please, we have what is called, so under the tax law, you can either have date of commencement, you can have date of incorporation and date of commencement. We have what? 2 dates. You have what? Date of incorporation and date of commencement, which I mentioned earlier that if you want to start a business, you apply to CAC, Corporate Affairs Commission, to what? To incorporate your business as either what? A company or a business name. When you incorporate, that date that your business was incorporated is what is called what? Date of incorporation. It is not compulsory that same date is when I'm going to start business as a businessman. Because what? The financial, the resources, the logistics may not be what? Available as at that time. So that means what? That date of incorporation may end up not being my what? Date of commencement. So when I now commence business, so that means the date of commencement is going to be different from my date of incorporation. Please, for the purpose of taxation, when you are computing basis of assessment, your date of commencement is what you are particular about. The date of incorporation, you have no business with it, because as at then, the only thing you need to do is to file what? Nil return that you are here to commence. But when you commence operation, you have what? Obligation to tax payment. So as a result of that, so when you are what? Computing basis of assessment, please, the important date is what? Date of commencement and not the date of incorporation. Because in the examiner will give you both the date of commencement and the date of incorporation. So the applicable date you need is what? Date of commencement. Please let us take note of that. So when we know that, what we need is what? Date of commencement. So our tax law now has now made our basis of assessment under commencement to be what? To be a little bit easier and simpler. In the sense that the tax law now is now simply on what? On preceding year basis. Before the Finance Act 2019 came into existence, basis period is usually a cumbersome topic, because we usually have what is called overlapping of basis period, and we usually have what is called gap in basis period. But the Finance Act has made this easier and modified now. That's what? You cannot be paying tax twice on the same period. So that is why what? That principle of what? Overlapping, common, and what gap in basis period has been what? Eliminated by the Finance Act. So now, the Finance Act has made it easier now. That's what? Basis period is simply going to be on what? Preceding year basis. Basis period will be on what? Preceding year basis. So if you are now commencing business, how am I going to what? Determine your tax liability based on your basis period? So in the first year of assessment, so for the first year of assessment, the basis period will be shall be profit from the date in which the company commenced assessment. Your basis period will be from the date of commencement. Look at that word, date of commencement. I did not mention date of incorporation. From the date of commencement to the first accounting period. That accounting period is that accounting date that I explained earlier. You know, I explained something about accounting date earlier. Who can remind us what do I say is an accounting date? Can somebody remind us what is an accounting date? Accounting date. Accounting date. What is an accounting date?
Okay, let me try some.
Okay, yeah, I'm listening.
Hello,
Olushi,
good afternoon. Let me try.
good afternoon.
Okay,
Okay.
sir. The accounting date, maybe you are asked to compute the capital allowance of maybe for the year ended or as at 31st December 2020,
Okay.
2024.
Okay. What is now the accounting date?
Pardon?
I say, what is now the accounting date? Date. Don't forget that word. Look at the word in front of it. Date, 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 not year. So
Okay,
that,
the accounting date now may be for the year ended at 30th September. 30th September is the accounting date.
yeah. So what accounting date means is that accounting date is that date that
Yeah?
is, yeah, okay, thank you. Thank you. You want to, Anayo, you want to say something?
Yes, sir.
Okay, I'm with you.
Yes, sir. Accounting date is the date at which a business entity chooses to prepare accounts to determine the performance of the business.
Thank you. Perfect. Perfect. Thank you very much. Yes, accounting date is that date that taxpayer, whether individual or company, they decide to work to prepare their account. That date, you know, if they say a date, that means it's going to be what? A single day. That day they choose that they want to be preparing their account to know whether they are going to make profit or a loss. That date is what is called what? Accounting date. So that is accounting. So for the purpose of commencement, so you're in the first year of commencement, the accounting date will now be what? From the date of commencement. From the date of commencement to the first accounting date. If the company is a company that decided to choose the government accounting date, so that means it will be from their date of commencement to their first accounting date, which may be either what? Either December, 31st December of any year. So let me illustrate that with, so accounting date. So let me look for somewhere to, so accounting date. I'm coming. Just give me some. So accounting date now. So accounting date will be, so let's say a company now decided to what? To adopt the government fiscal year. If we are, let's say we are in year 2020. So the accounting date will now be 31. Accounting date will be equals to 31/12/2020. So that date, 31st of December, that they decided that they are going to be preparing their account, is what is called what? Accounting date. So the law now says that what? So the law now says that accounting for basis period in the first year will now be from the date of commencement to the first accounting date. Note that what? From the date of commencement to the first accounting date. In which the year, there's a difference between basis period and the year. In which the year will be what? The year after the year of commencement. So in which the year will now be the year after the year of commencement. So let me also illustrate that again. So what will now, so if this, for instance, assuming for example, if for example, we are told that a company commence on 1/4/2020 and make accounts to 30th November annually. So that means in the first tax year, we have tax year, we have the basis period. So the first tax year, the basis period for that tax year will be from the date of commencement. When did the company commence operation? According to this example I'm giving. When did they commence operation? Oh yeah, now somebody should say it now. Yeah? When did they commence up? 1st of April. So the first year will be 1/4/2020 to their first accounting date. The accounting date is at when? 30 November, which will be 11/2020. Because after April, we are going to get to what? November. So that is what? How to determine the basis period. In which, after determining this basis period, the year of assessment now will now be what? A year after the year of commencement, which is the tax year now will now be 2021. So the tax year will now be what? 2021. You can now see now that what? This basis period now, is it preceding to this year or actual to this year? This basis period that I illustrated, is it preceding to the tax year or actual?
It is preceding.
It's preceding. So that is what the rule says. Basis period is now strictly on what? Preceding year basis. Under what? Under the new Finance Act. Under the finance. So that means basis period in the first year will be what? From the date of commencement to their first accounting date. So that is what? In the first year, in the first tax year. After the first tax year, we have the second tax year. So for the second tax year, second year of assessment, so the basis period will be what? A day after the last, a day from the first day after the first accounting period to the end of the second accounting period. That is, what does that mean? A day after the last accounting period to the next accounting period, which is going to be what? A period of 12 months. A day from a day after the last accounting period to the next accounting period. So what does the law mean by that? So let us also illustrate that. The last accounting period we have here happen to be what? 30. What is the last accounting period we have here in this example? November. 30th November 2020. What is the day after? What is the next day after this 30 November 2020?
1st December 2020.
Yeah, 1st December 2020. So the tax year will now be 2022, year after 2021, which will be the basis period will now be 1/1/2020 to the next accounting day. And what is the accounting date? Who can remind me what is the accounting date of this illustration we are giving? To the next accounting day. What is the next accounting date? 1/12. This is 1/12. What is the next accounting date? What is the
30
accounting?
November 2021.
Yeah, 30 November 2021. Why didn't we put? I expected somebody to say 30 November 2020. It's not possible because we have already this first one has already passed what? That 30 November 2020. It will now be what? The next year, which is what? 2021. If you look at this basis period now, 2021, this year is preceding to what? To 2022. So that is how to determine what? The basis period under what? Under. Then for the third year, for the third and subsequent year of assessment. For third and subsequent year of assessment, under the third and subsequent year so the basis period will be what? The same way you did under the second year, you also will continue for subsequent year. A day after the last accounting date, up to the next accounting date, and so on and so forth. In which what? The basis period will strictly be on what? On preceding year basis. So which is what? A day after. So in the third year will now be what? 21. What will be the third year of assessment? Who can tell us? Third year. Oh yeah, now third year. What will be the third year of assessment?
2020.
20 what? I can't hear you. Hello?
2023.
Yeah, 2023. In which the basis period will now a day after 30/11/2021, which is 1/1/2021 to the next accounting period. What will be the next accounting period? 30 what?
November.
30 November 2022, and so on and so forth. The next year will be 2024, which will be what? 1/12. This is 1/12. Will be 1/12, 2022 to the next accounting period, 30/11/2023. You must ensure that whatever you have at the back here, the year you have at the back here must be preceding to what? To the tax year. Do we get that? Whatever year you have at the back of the basis period here, whatever year you have at the back of this basis period must be a year before this tax year. Where you don't have a year before this tax year, that means what? Your basis period is not correct. That is for what? Under what? Under commencement of business. And how do you know when to stop? You will stop at the year of assessment where what? Based on the information given to you. In the exam, you are going to be given it's not only this, you are going to be told to calculate the assessable profit. So based on the number of years of assessable profit given to you, will determine the tax year that you are going to stop your computation. So any question? Any question?
Yes, sir, please, I want to confirm something.
Okay.
Yes, sir, so we are saying that the first year will be
Okay.
date of commencement to
Yeah.
the accounting date
Yes, to
the
the
business has
accounting date.
chosen. So either it is 12 months or less than
Oh
12
no,
months.
yeah. It's not necessarily it has to be 12 months. That is why they call it what? Abnormal basis period.
Okay, sir.
What is some of the characteristics of abnormal basis period is that what? It's either what lower or more than 12 months. So it's not necessarily has to be 12-month period. Do you get it?
Yes, thank you, sir.
Any other question? So in the absence of no question, let us use an illustration to illustrate that. The first one, let us use an illustration to. So we have what? The question as question 1. Nana Nigeria Limited. Question on page 3. Nana Nigeria Limited was incorporated on 1st of August 2019. But due to logistic issue, the company did not commence operation until 1st of April 2020. The company accounting year end is 30th September annually. The following information relates to the company income statement. So we are giving some information. The first one, period to 30th September 2021, 25 million. Year ended 30th September 2022, 15 million. Year ended 30th September 2023, 16 million. Year ended 30th September 2024, 15.5. You are required to compute the assessable profit for the relevant year of assessment. So we are told that we are required to compute the assessable profit for the relevant year of assessment. In computing this information, we need to do some analysis. What are the analyses required? The first thing you need to do is that you need to analyze your information based on available data. We are given various dates. We have a date of incorporation and date of commencement. And who can remind us? So I said you are only concerned about which date? Which date are we concerned about under basis period?
Date of commencement.
Date of commencement. So that means that date of incorporation is what? Is of no importance to us. So the examiner just put it there to what? To confuse himself. So the date of commencement happened to be 1st of April 2020. And we are told that this company has chosen the accounting year end to be 30th September annually. So that means this company did not follow the government accounting year, and there is no crime in it. No law says you must follow government accounting year. So the taxpayer has selected 30th September as their own accounting date. So how do we now calculate the tax? So for computation of tax liability, please, you need basic requirement in order not to lose mark. What are those basic requirements? The name of the taxpayer is very important. Then the requirements. The requirement of the question is also very important. You must state the name of the taxpayer. You must also state the requirement of the question. Under this, the name of the taxpayer happen to be what? Nana Nigeria Limited. So you write it out. Nana Nigeria Limited. So we are asked to compute your computation of assessable profit. You now put the requirement, computation of assessable profit for. Now, we don't know the year yet. We may not know the year yet, but you can put in the exam, if you don't know the year of assessment you want to compute for, you can put for what? For relevant year of assessment. Or so you can also wait until when you finish your computation, then you now put what? For all year of assessment. If, for instance, so we have a computation assessable profit for, assuming we stop here now, we don't know the year yet. So based on this information now, the first year, this company commenced operation on 1st April 2020. That means the first year of assessment, we have a tax year basis period and assessable profit. The first year of assessment will be which year of assessment? when we commence in 2020.
2021.
Yeah,
2021.
2021. Yeah, that is why we have what? Tax year, the first year happened to be 2021 year. Then the basis period will now be from the date of commencement. What is the date of commencement? What is the date of commencement?
1st April. 1st April.
Which is 1/4/2020 to the next accounting date, which is what? And their next accounting date is what? 30/09/2020, 30 September, 30/9/2020. If you look at this period, who can tell me how many months do we have in this period? How many months is this? 1/4/2020 to 39, from April to September. How many months is that?
6 months, sir.
6 months. If this period is 6 months, and the information given to us by the examiner gave me information of period to 30 September 2021. Let me go to, I'm coming, I want to do something. Period to 30 September 2021. The examiner gave me, period to 30/9/2021, which is from, this information is starting from the date of commencement, and which is from, and the date of commencement, which happened to be 1/4/2020.
1st April.
Yeah. So we have a 1/4/2020 to 39/2021. Who can remind me again? I told you, when they tell you period to, what does that mean? When they say period to, what does it mean?
Because they started the period. So what we need to do here is to get the accessible profit. We do 6/12 multiplied by 25 million.
I said, when they say period to, that is not my question. My question is, if they tell you period to, what does it mean?
When they say period to, it means it is either above the year, the month is either above 12 months or below 12 months.
Thank you. The month is either more than 12 months or less than 12 months. Please, period to is not the same thing as year ended. It's only year ended that is 12 months. So, looking at this information now, please don't go and crack your brain in the exam. You can analyze this thing one after the other. I want to get the number of months here. I can see 1/4/2020 to 31/12/2020. The next one will start from 1/1/2021 to 39/2021. 1/4/2020 to 31/12, December 2020. How many months is that? April to December 2020. How many months is that?
6 months, sir.
April to December. April to December.
That's 9 months.
9 months. Thank you. We have a 9 months. From this January 2021 to 30/9/2021. April to September. How many months is that? January to September. How many months is that?
9 months.
9 months. If you add 9 plus 9, the totality of this number of months will give us how many months? Nine plus 9 months will give us how many months?
18 months.
Yeah? Oh, yeah, now. 9 plus 9.
18 months.
18.
So that means the totality of what you have here is what? 18 months. We have 18 months. And I needed, in this first information, I needed this 1/4/2020 is only 6 months. And we are giving information for 18 months. So under my working now, look at it. 2021. I will just say 6 divided by 18 multiplied by 25 million. 6 divided by 18 multiplied by 25 million. Please, Don't go and say 6 divided by 12 because that period is more than 12 months. For that person that mentioned 6 over 12
Sir,
before.
please
So,
recap.
yeah. Okay.
Recap, sir.
The totality of this number of months. Let me go back to. I'm supposed to share, but I've not developed in our next class. I'm going to share that information so that it will be easier for the Excel that will be. Then 9. This is. We have 9 plus 9, 18 months. The totality of all the months is 18 months. If the totality of all the months is 18 months, and based on this information that I did, this basis period I need is only 6 months. I need only 6 months in 2021 for them to pay tax. And I'm giving information for 18 months. How do I get the value for 6 months? So the value for 6 months will simply be 6 over 18 multiplied by that value given to me for 18 months, which is 25 million. So multiply by 25 million. So that will give us this value of what? 83333. So which is what? The value for what? For the value for the first year of assessment. Any question? So after that, that's the first year. The next year we have what? 2020. After 2021, the next tax year will be 2022. For 2022 year of assessment, basis period is usually a day after the last accounting date. After this 30, who can tell me after 39? This 39, after 39, after this 39, 2020, what is the next date?
October 1st.
1st of October. Which year? 2020. Abi?
2020.
Yeah,
Yes, sir.
that's why you. So the next basis period will be 1/10/2020 to the next accounting date. And the accounting date is on 30/9/2021. How many months is this basis period in 2022? How many months is this basis period? How many
12
months is that?
months. Sir.
It's a
12 months,
period of
sir.
It's a period of 12 months. And if you look at this information, I can find this information in this 25 million. Is that not so? This information of 1/10/2020 can be found in this period to 30 September 2021. And this period 30 September 2021 is for 18 months, and I need only 12 months. So 2022 will be 12. That will be 12 over 18 multiplied by 25 million. That will give me what? 16,666,667. So that's how this value of 16,666,667 was derived from. After that year, the next tax year will be what? 2023. In 2023 year of assessment, for 2023, the basis period will be a day after this last one, which is what? 1/10/2021 to the next accounting day, 30/9/2022. Then I'll go to the information given to me again. I have year ended 30 September 2022. And who can remind us again? I told you when you see year ended, how many months is that?
12 months.
12 months.
12 months. And this information I need, how many months is this information? 1/10/2021 to 30, 12 months. So that means this value has been given to us directly by the examiner straight away. So no stress. The examiner has given us this value straight away. So you just pick the value and slot it in your solution, 15 million. After that, because the examiner said for all relevant year of assessment, you do for all what this information can accommodate. So the next year will be 2024, which will be a day after this 1/10/2022 to 30/9/2023. This information is also for 12 months. This 12-month information, you can also see it here in this year ended, 16 million. So no work, so you don't need to work that out because it's already given to us by the examiner straight away. It's provided directly by the examiner. So after that, 2024, the next year we have what is 2025. 2025 will be a day after this, which is 1/10/2023 to 30/9/2024. If you check this information also, we have what this value there, 12 months, 15,500,000, which is what you slot in. Then after 2025, we have 2026. You can see that I did not proceed to 2026. Who can tell me what is the reason why we didn't go to 2026? What was the reason?
Because the question stop at 2024.
Yeah, thank you. Because this question stop at, if you look at this question, stop at year ended 30 September. We have used here. If I go to 2026, I don't have, the question did not give me information about that one, about that basis period. So I will stop at one, and that year of assessment of what? Of 2025. So that is how it was. So that is how to determine what basis period under what? Under the what? The commencement of what? Of business. Basis period under commencement of business. You can see that that is what? The determination of basis period under commencement of business.